Hello, everybody, and welcome to today's episode of Trade the Chain. It is, I'm on an island, I forgot what day it is. It is, I think it's Thursday, March 25th. And thank you for joining us. Listen, I'm here with Ryan Gorman, who has the windiest hair in crypto. I have Monty and CJ, crypto analysts from marketrebellion.com. And there's a lot of stuff going on in Bitcoin that we want to talk to you about today. CJ and Monty have some deep analysis. There's options expiries happening tomorrow. There's a ton of stuff. So before we get into all that in the big boards, Ryan, take it away with the plugs and the legal as a plane goes behind me.
That thing's about 100 feet off the ground. That's amazing. Anyway, this is just a reminder that all content provided by Trade the Chain is strictly for educational and informational purposes. Absolutely none of this is investment advice, nor is it travel advice. Do not listen to anything we say, not a word of it.
Not that you'll be able to hear it today anyway, but if you do hear it, don't listen.
Trade the Chain is brought to you by TradeTheChain.com, a global community of traders around the world, because it's global, all using AI-driven sentiment indicators and actionable alerts to help them be effective. If you too want to trade like a crypto insider, check out TradeTheChain.com, and if you're not already a member, you get a 14-day trial.
Pretty neutral today on the sentiment dashboard, but moving over to marketrebellion.com/crypto. This is Monty and myself and our community at Market Rebellion. With us, you get access to exclusive trade ideas, our macro portfolio allocations, a pro charting platform, a trading education curriculum, and an elite community of traders all throughout the world, and much more. If you're serious about trading crypto, this is the service that gives you everything you need all in one place. And you can start your first month trial for just $1 at marketrebellion.com/crypto. Any opening thoughts before we dive into the charts and the big boards here?
It's as beautiful as it is windy here in Puerto Rico. I'll say that much.
Take it away, gents. It's all yours.
It looks beautiful down there in Puerto Rico. Wish we were there with you guys, but we're stuck here in Chicago. But that's okay. We got some exciting stuff to talk about in Bitcoin. So CJ, what are you showing us here?
I want to start by giving you guys or just highlighting an understanding of the current trend and what we've got going on the daily chart so far. And what I have highlighted here, the indicator that has allowed us to have some pinpoint accuracy at calling these bottom level dips has been that of the Keltner channels, right? And each time we have a beautiful increase, we go above the top level. Then eventually we come down, but we create support at that bottom band right there. Then the second thing happens as well. We go up and we bounce right off that bottom band. Now, we are in a very similar state, right? We're reaching that bottom channel like we did each time before. So in my mind, the trend is kind of at a catalyst here. It's kind of at a crossroads. This is either going to hold or it's not. And we're probably going to drop down likely to 48K in the short term. I think 50K is very, very important support if we look at over here some of the flatline levels. But I do want to observe both the bullish and the bearish case. The bullish case would be a bounce from some of these Keltner channels at current price. And if we look at this previous run up, it's pretty much like a giant bull flag. So what we can do here is we can measure that and then extrapolate price from that breakout area to a target of roughly 75K or 74K. If we do actually, in fact, break out of the downward sloping trend line, which we've seen thus far. Now, it's going to require the bulls to have some significant momentum to get back up above here, especially when we're already seeing the Keltner channel starting to droop. So like I said, we're at a crossroads. I think the reason why we've seen so much sell pressure here in the short term is because of those Bitcoin options expiration. Remember, like it's the Friday of every month. Additionally, I think we are seeing a lot of funds that are rebalancing after, I think of Paul Tudor Jones. I think of the early institutional investors that got in when Bitcoin was at like 8 to 12K, anywhere from that region. Those individuals are taking profit and rebalancing regardless of how bullish they are fundamentally in the macro view. Also, one thing that I could bring up, I'm not going to because I want to pass it on to Monty, but the DXY, the dollar currency index, has actually been very bullish these past couple of weeks. And typically we will see an inverse relationship between an increasing price in Bitcoin and a decreasing price of the DXY. And right, that makes sense. The stronger the dollar is, the more difficult it's going to be for things like Bitcoin and tech stocks to rally. So I think all of those things are contributing to the sell pressure we're seeing, but we're going to have to see if that support holds like it has so far.
I think that's interesting. Real quick, CJ, before Monty begin, I think it's interesting you point out that that next price target could be 75K because that's where a significant amount of options positioning is. And it's almost as if the market was forecasting that ahead of the model showing it itself. So it's just interesting parallel, I guess, that I've noticed.
I mean, everyone's looking at the same chart, right? They're looking at the same stuff, thinking, "Why, God, I hope this holds." If they're bullish, or the inverse, obviously, if they're short. Monty, what are your thoughts?
Yeah, CJ, thanks for pointing out those technical levels. And I think what you pointed out there with the kind of pattern formations that we've been seeing so far in 2021 is really interesting. And I kind of want to just provide a justification that I've been seeing for this kind of overextension followed by a correction where we kind of hit a new higher low. And we talked about this morning, CJ, but I think it's definitely worth talking about again. And that is the tweet from Willy Woo with the Glassnode analysis, because I think that this is kind of the phenomenon that is allowing these formations to continue to emerge and Bitcoin to continue to climb, right? So every time we see this happen, this right here, the run-up, is typically fueled by retail speculation, right? This whole ecosystem is obviously bolstered by whales and institutional money. But when we get this overextension in a very quick manner, it tends to be fueled by retail fervor. Then we get some profit taking from those players that CJ mentioned, the bulls that have been holding and that got in early. They're more than content to take profits following a steep run up, and then price goes back down. And what we've seen historically is every time we get one of those corrections following that massive run up, we get a huge transfer of funds off of spot exchanges into cold storage. So as you can see, on all three of those instances, when we've pulled back, we've had big transfer flows from spot exchanges to cold storage, implying that whales are taking money and putting it into their HODL stack. So it's a really interesting kind of phenomenon that's happening here with Bitcoin, and one that is, and this metric is kind of one that's unique to Bitcoin. So I love looking at it because the value of Bitcoin on spot exchanges is a great way to tell kind of what Bitcoin is being locked up for the long term. So when I look at this chart and I see these pullbacks to these new levels and these price floors being created, that is indicative to me that whales are content to buy these levels. This is also supported by another chart, Willy Woo, the liquid supply chain. So as you can see, we actually had a historic day yesterday. The greatest amount of change in the liquid supply so far in 2021 was in fact yesterday, as tons of the supply was moved into cold storage and locked up. So it's just really interesting to kind of note this pattern that CJ was talking about, where we get this run up of retail traders speculating, followed by these institutions taking profits, but then buying back in and moving that to cold storage. So when these traders sell right here, it goes directly into the diamond hands of the whales and the long-term hodlers. And I think that we're going to get a continuation of that pattern here. So interesting stuff. Willy Woo pointed this out, and he referred to these people as Rick Astley hodlers, because they're never going to give Bitcoin up. They're never going to let it down. They're never going to turn around and resort and desert it.
That was so bad. Oh, jeez.
We could have shown.
It's Willy Woo, all right, not me. But I actually like the term because, I mean, these people aren't selling. They have diamond hands, and they're so important to this market. So that's where the Bitcoin's going, and I think that's why we've been able to create these higher lows.
Yeah, and the term that Monty is referring to when you have those whales selling into strength is called a liquidity hunt, because you can't sell the top, or you can't sell after the top has occurred if you're a fund with tons of money, because there's not enough liquidity to get out. And so you need to use things like the sequential indicator or find some method in which you can sell into strength, which then, causes those profit taking periods that Monty pointed out. But when you look at the fundamentals, when you look at who's putting away Bitcoin, it's hard not to remain macro bullish despite the recent sell-off.
Well, I mean, Monty, he went through those lyrics so well. Maybe at the end of the show, he can just sing them to us. You knew every word in that song. That was tremendous. No, I personally agree with you, CJ. I feel like there's no bearish indicators, with the exception of we may go down into the 40s, but all signs are pointing to the first bet of options at the 70s, and then after that, I believe the second largest gathering is the 120 mark.
Yeah, I think that's right, Alex. So yeah, I like that CJ made that prediction of 72K. I think that's a very realistic price target following this options expiration tomorrow. So we've got a ton of volatility, and I think 50K might be the new price floor. So that's what we need to start looking for, is the next plateau, and the options expirations are a good level to look at to kind of guess where that plateau may occur.
Very cool. And CJ, do you have some news and some interesting facts on Voyager Vgx?
Yes, I think a lot of people have seen this on Twitter. I'm definitely not the first to mention it, but Voyager is climbing the ranks in the App Store like crazy. Like perhaps you in your old racing days, you're just passing by everyone, blowing them out of the park. I think they passed both Chase mobile app and Robinhood in frequency of downloads. So, I mean, they're onboarding users like crazy still. So it's going to be very interesting to see those numbers. And I think there's going to be some time in which people download the Voyager app and then they truly find out the benefits of VGX. Because I know a lot of people, I know I'm speaking generally, but I know a lot of people who have the Voyager app, but they're not aware of the benefits that VGX gives them. I think we've had a lot of feedback from the Voyager community saying to Steve, listen, you need to you just need to make it more clear about why people should, buy VGX in the app because of the, extra benefits. Maybe just highlight it and then say like, buy this below it. No.
I mean, they need to do something, because if you have downloads going up this much and you have it positioned this well for success, and to have VGX down over 30% over the last 30 days, I'm starting to wonder if, Pat Ackerman's a smart guy. And generally, he's knowledgeable, but I'm starting to wonder if the whole token efficiency model, a way of looking at things, is what's going to take VGX higher if you have all these people with Voyager accounts and no real positive impact on the coin itself.
I have my prediction here. So what I feel is going to happen is you have, first of all, folks, what you don't realize is that almost simultaneously, we're going to get first quarter earnings report at the same time that we're doing a token swap. At the same time, the new Voyager loyalty program is going into place. That's step one in my mind. After that, you have New York, you have Canada, and you have Europe. And those narratives are going to come out in phases across the next, let's call it 6 months or so. And that's going to drive it to what my prediction is for end of year at $50. And I believe that's going to hold it.
I mean, I sure hope so, because it hasn't been performing well lately, and there's no reason why it shouldn't be performing well lately based on this increased adoption. So I'm starting to worry. If the Voyager loyalty program is robust enough, if the token swap is enough of a catalyst to drive it higher. So I guess time will tell, but in the immediate term, the momentum isn't promising.
I'll agree with you there, Ryan. I think the positive thing that we can take away, and like when I'm talking here, I always get super depressed. But then when Steve comes on and talks, I'm always like super reassured. It's like back in the comfort zone. because he listens, he gives feedback, he accepts it, he makes those implemented changes that are suggested by the community. And so, yeah, I agree that the token efficiency model probably isn't perfect due to what you've been saying, Ryan, and the points you've been making. But they're a very profitable company. Like he said before, there's many levers they can move to adjust the loyalty program to increase that token efficiency. It's just that I don't know if it's that's their greatest priority at current time. So we'll see.
Yeah, there's a really interesting kind of dichotomy there with Voyager, right? Because obviously they want to incentivize people to buy their token and that token efficiency element, but really they're also trying to grow their company and become a better, more legitimate brokerage and onboard new users. So it's like, you don't want to just be shilling your token. You want to be showing the benefits of your platform and why it can succeed in the future. So it's like, they need to find a nice balance between that. I think they're working on it. And I think the token efficiency is something that can be improved slightly going forward. And I think that will incentivize a lot of these new users to buy and hold some VGX.
I mean, you don't have to shield a token to improve its performance. All you have to do is improve the incentives, and it's kind of an indirect way of catalyzing adoption, right? You improve the incentives to hold it, and you just roll those out, make sure the community is aware of it, and then more people will hold the token, more people buy it, and more people will use it, and it will appreciate in price. That's not necessarily chilling it. It's just
I do agree with CJ and Monty, though, in the fact that it's not an immediate shareholder value check the box for that, right? So it's secondary. Shareholder value is going to be Canada, New York, EU, and then showing the VGX token.
Yeah, it's not like it's Binance or BNB where, half of the CEO's net worth is in the coin. You know what I mean? Like, it's totally different than that. And that's something that, it's okay, but you should just be aware of that,
All right. Anybody else have any lasting comments before we sign off? All right, I gotta go get me a pina colada. Folks, thanks for joining us today. It really is that important news that we're focused on with Bitcoin that came out from CJ and Monty, and we're looking at that. So, as another airplane flies behind me, I would like to thank you very much for watching us today. Thanks for our horrible on-location filming. We won't make this mistake again tomorrow. I promise you that. Until then, hang on to your handlebars, and we'll see you tomorrow for our next episode of Trade the Chain, folks.
Bye, everyone.